Vasel is actually dialing in. I hope I'm pronouncing your name correctly, but welcome to the show. What's your query?
Yes, sir. I'm having Motilal Oswal shares at the price of 926. I'm having 780 shares.
Okay.
At the price of 926. Give me a suggestion whether to make it average or should I go on with the loss and sell it.
Are you a long-term investor or is this a short-term bet and you're looking to get out?
I want to wait it for another 2 to 3 years, sir.
Okay, 2 to 3 years. All right. Let me welcome in, Avinash. Now, Avinash, good morning. Welcome to the show. Definitely a tough morning for the markets. The question from our viewer is largely on Motilal Oswal. He's bought it at 926, holding considerably 780 shares at this point of time. Is there enough evidence to suggest to average down at this price point?
Good morning, Puneet. Puneet, before answering this question, I just wanted to share that the last time crude went up to 150, it was 2008 June. After that, there has been a very big roller coaster ride.
Right.
Normally during the wartime or during a crisis, these kind of prices are completely unpredictable. But I think, now coming to the query of the investor, I think financials have been hit very badly. Banks, financials normally get hit very badly in such kind of time. So, you must understand that if you're bought Motilal Oswal, are you willing enough to stay invested for the next 3 to 4 years? This is a great franchise, a very strong management bandwidth. And in a growing economy, capital related intermediary stocks definitely do well. So I would suggest that, if you have the heart to, stay invested for the next 2 to 3 years and have the conviction, definitely you should stay invested. If possible, try to average a little slowly, not immediately. But I think definitely the next 2 to 3 years are going to be quite promising. So near term, yes, the trend is painful. The stock will definitely struggle a little bit. But over the next, say, 2 to 3 years, I'm quite sure that the bounce back will be equally sharper. In fact, you could get the bounce back in the next 12 to 18 months, hopefully, if the war ends and things get back to normal.
Okay, all right. So that's the view coming on Motilal Oswal. The next one is also for you, Avinash. This is on HDFC Bank. Suman from Kolkata has bought 59 shares at an average price of 932. She's holding the stock for the next 1.5 years. Wants to know if she could go ahead and buy more or continue to hold the quantity that she's already holding. Avinash, what's the view like?
No, I think, the fall has not been very dramatic for HDFC Bank. So my sense is that if one were to average, one should look at slightly lower levels, which I don't think will happen because it's a widely spread stock, a large cap stock, and normally large cap stocks don't fall that significantly. But considering her time frame of, say, 12 to 18 months, I think definitely this stock has got all the ingredients to bounce back. I think there's no doubt that the banking sector in India is going to grow well. But I think in the near term, there are going to be, short trends of panic selling. So I think continue to hold and I think keep the faith. I think I'm quite sure in the next 12 to 18 months, the investor could get a decent risk reward.
All right. So that's the view on HDFC Bank. We've got Udit calling us from Delhi. Udit, a very good morning to you. How can we help you?
Good morning. Hi, I'm Udit. My question is on Sula Vineyards. I'm holding 1,300 shares at price of 201. I just want to check if I can continue to hold, especially with the recent Karnataka excise news and all going along.
Correct.
And also the grape harvest.
Right. Okay. I suppose that you're looking at a fundamental view for this particular counter, right?
Yes. Yes.
Okay. Avinash, I mean, this counter has, seen a downhill since, for the past 3 or 4 odd quarters. And, somehow the volumes are not growing for Sula Vineyards at all. And that's why we've seen the stock also tanking. Considering the Karnataka move that has just come in with regards to, no capping of prices by the government, might benefit for sure, but still we'll have to wait and watch out for as to how Sula Vineyards can benefit from this particular notification coming. But overall, volumes plus prestige and above category is not growing for this one. What's the view like?
Right, that in the last 3 to 4 quarters, volumes are not growing, margins are coming down. Most importantly, despite having a very strong brand in the domestic market, wine sales have not taken off the way the company had expected. And that's the reason the stock has been hammered from almost 300 odd levels to, 160 odd levels. See, my suggestion is that despite the relaxation in Karnataka, it may take a little bit of time for a player like Sula Vineyard because wine, drinking in India is a very relatively new concept. Not many kind of large customers in this category. I think the investor should actually wait for another quarter and then I think look at switching over to some liquor stocks, which I think would benefit the most. Something like a Radico Khaitan or maybe a United Spirits, which definitely are going to benefit significantly. In fact, one could also look at Tilak Nagar Industries. I think they have also taken a very big acquisition of late, and I think their market share in the south has increased significantly. So I think, rather than waiting, probably if the investor wants to make his capital work faster and more better, then I think a switch is advisable. Sula Vineyards, I don't think January to March quarter is also going to be anything great. So it's better that he switches over to either of these stocks.
Got the view, Avinash. Definitely the Karnataka ruling a big positive for United Spirits. 15% volumes coming in from that state itself, but a strong one there. Next caller coming in from Amchi Mumbai itself, and Nishad has a stock query for us. Nishad, good morning. Welcome to the show. What's your query? Hi Nishad, am I audible to you?
Yeah.
Yeah, go ahead Nishad with your query.
Yeah, I'm holding ONGC and Oil India.
Okay.
It is around 15% of my portfolio. I had bought it because I had thought that oil prices are going to go up.
Right.
I had bought it when oil prices were $60. Now
Right.
it's at almost 120, but the stock hasn't gone up.
Right. Got it.
Yeah.
Fair point, Nishad. There, Avinash. Actually, let me come back to you on, or Avinash, let me come back to you on this one because it's a very volatile time, right? You will see some time for what happens and if this actually comes back to earnings for ONGC and Oil India. But what would you recommend at this point of time to Nishad? It's 15% of his portfolio. Avinash, what should he do?
No, I think my guess is that he should continue to hold. See, because some part of the oil must have been hedged at a relatively lower price, and that could be the reason the stock is not going up. But January to March quarter, once this quarter is over, and obviously if this war continues, then there are very strong chances that oil could further gallop down to 120, 130 $1 a barrel. And at that point of time, upstream companies like Oil India, ONGC could definitely benefit. So I think he could still take a call of holding on because it doesn't seem that the war is going to end in a hurry. It could take at least another 3 to 4 weeks before any solution comes in, which also is an optimistic kind of scenario. So I think he should hold on. I think he's got the right stocks in this kind of market because upstream companies will definitely be in a positive shape considering the rising crude oil price scenario.
Okay. All right.
At 52 shares bought at 850, and this is Pooja. Let's look at the 1 year chart also because down 6.5% today. 1 year stock's done decently well, almost up 20%. Now, Avinash, he wants a long-term view since he's bought it at 850, stocks at 968. Are you in a favor of continuing to hold this particular counter for the long term? What would you suggest, given that we're seeing money being taken off plays, especially where there has been returns generated over the last year or so? What would you recommend?
No, I think he should continue to hold. I think currently, the sentiment is weak. My sense is if he can give in another, say, 6 to 8 months or maybe a year, I think definitely he should hold on. My thinking is that, the stock can definitely show a good bounce back, but I think it will take a little bit of time. So as of now, I think rather than booking a loss, it's better to hold on, at least for the next 6 to 12 months.
Okay, all right. The next question is on iron exchange, and this is from Venkat Ramana, who's writing us from Hyderabad. He says, is this the right time to make a fresh entry into this counter? Please explain with fundamentals as he's a long-term investor. Avinash, I'll stick with you for this one. What's the view?
Yeah, I think longer term, the water purification, market is a very large market. Plus, iron exchange operates on very large turnkey orders, and they've got a decent order book. So my sense is that these kind of companies have the potential to bounce back. I think in the short term there will be a little bit of panic, but I think yes, if investor wants to buy in, I think he should use an SIP approach. Try not to put your entire capital in one shot. Try to maybe deploy 20-25% of the money you have. And I think closely monitor the movement because any dip should be used as a buying opportunity, maybe at even lower levels. But yes, longer term, we are structurally positive on the company.
Got that view, Avinash. The next question, that's coming in now. It's on a couple of plays yet again that have done well. Now, one's on Eon Exchange. Our viewer Venkat Ramana actually wants to take a fresh entry. Sorry, did you just take?
Yeah.
Okay, you just took this question. Okay, let me go across to the next one then. On Greenply Industries, actually, this counter has not done too well over the last year. Our viewer is holding 1,500 shares bought at 403, and that is Shahid. He's currently sitting almost at a 50% loss. Not mention his time frame, but Avinash, would you suggest exiting this counter, or what would you recommend him to do? He's down almost 3 lakh rupees. Your view?
No, I think, see, the MDF market has seen a lot of oversupply, and I think that has been the main reason, the stock has underperformed. Plus, the kind of price the stock, has been purchased has been a very high level of price. So, to expect the stock to go up from 190 to 400 is definitely not an easy task. I would suggest that, you should look at the banking sector. Many stocks are available, something like a Federal Bank or maybe something like a Bank of Maharashtra. I think despite the fact that the Bank Nifty is down today, the banking sector is one sector where I think it has got us a lot of resilience to bounce back. The Jan to March quarter is going to be good, and hopefully, if this war ends, then I think something like a Federal Bank can give him a better kind of decent return compared to a green ply, because as of now he's almost 50% negative, and to get that 50% negative, it will be a Herculean task to get this price upward. So Federal Bank seems to be a better choice. I think that would be a better kind of switch in the current scenario.
Question that's coming in, Avinash, it's your way. Shankar from Delhi is asking, in this current market downturn, would you identify 5 large cap stocks that can you suggest to buy right now? Avinash, there have been multiple views here that large caps still have a long way to go in terms of correction, in terms of valuation, but there is also the counter argument that it's not done well in the last 18 months. Which camp are you on? Any picks that you would suggest?
So I think large caps or mid caps or small caps, Puneet, I think you need to understand that you need to have a lot of guts in this market to go against the trade. So I think if one were to look at names, I think we still continue to be positive on companies like Mahindra and Mahindra. For that reason, something like an Indian Hotels, something like a Apollo Hospital. These are large companies which have got very strong visible earnings, on their kind of balance sheets as well as profit and loss accounts. And in this market, I think you got to invest in companies which can survive the next 3 to 5 years. So I think these 2-3 choices are enough for an investor to start deploying money, that too in an SIP fashion, because in this kind of market, nobody is spared. Even the large caps are beaten down. So I think try to deploy 10-20% of your capital, wait for some time, wait for clarity to emerge. And I think these companies will generate a lot of wealth for you over the next, say, 2 to 3 years.
Okay, all right. So that's the view coming in on the entire large cap space.
I was just looking for Bharti Airtel, a lump sum investment of about 2 to 3 lakhs in that. I have a horizon of 5+ years, and for the balance money, I would like a couple of mid cap stocks where I can buy in tranches during this dip for again 5 to 6 years.
Okay. That's a smart way of asking too many queries in one question, Vinod. I appreciate that. But I'll take this up with Avinash because Avinash, you already mentioned your picks in the large cap space. He's asking about one, Bharti Airtel, and second, any counters that you're liking in the mid cap space right now.
So Bharti also definitely deserves a long-term pick. I think again the question is, what kind of underperformance the investor is willing to face. My sense is rather than putting the money in lump sum, put say 20-25%, wait for the markets to settle down. And I think Bharti Airtel is definitely a good company, a very good long-term player in the telecom business. So they would do well, but in this kind of market, it's always better to allocate your capital carefully. So maybe an SIP in Bharti Airtel could be wiser. And as far as mid caps are concerned, I think the hotel space has been doing very well. So I think a company like Lemon Tree, they have announced a massive restructuring. Very soon the company will become asset light. So for the next 4 to 5 years, if the investor has the conviction, I think Lemon Tree definitely has the potential to make a lot of money for the investor. So these are bets where at least the business inherently is strong and the balance sheet will get better over a period of time.
Got the view of Avinash, and we're throwing all these questions at Avinash where he's clearly saying don't buy, stay away. But Avinash, we already apologize for all these because we are getting so many queries at such an important time today in the markets. But the next one that's coming in is on Canara Bank. Avinash, I'll come back to you. Divya, who is a regular viewer, has actually bought it at 148. Now, Avinash, what would you recommend? Because we're seeing correction, very big correction on the PSU banking names, and these have done well for investors, right? Should she wait for some more time?
ये nat habit का bright
the financials and the NBFCs and the banks. So I think in that context, this fall is not completely anticipated. But I think Canara Bank is definitely a strong bank. They have a large digital space. where they operate, most of their apps. Then I think they've got Canfin Homes, which is one of the larger, housing finance companies in South. So my sense is that definitely I think the investor should take a 2-year view. I mean, if he wants to stay invested here, I think keep a time frame of at least 18 to 24 months. Banks are going to do increasingly well, and I think, as I said earlier, it's very difficult to pinpoint what price the stock will come down finally. So it's better to allocate say 10-20% of your capital, and remaining ammunition and gunpowder should be kept ready. So whenever you get a further panic, you can add more.
We have is from Nihal Mohandas, who's writing us from Mumbai, asking if he can go ahead and invest in Britannia for the next 1 to 2 years, and at what price should he go ahead and invest? Avinash, your view on this one?
I think my guess is, again, Britannia is not a cheap stock. It is a fair to expensive stock. But yes, tailwinds in the FMCG space have started improving. We could see better numbers in the January to March quarter. So I think if he's got a 2-year view, my suggestion is, again, I think don't buy everything in one shot. This is a large cap stock, so it's better that you allocate say 10-20% of your funds immediately, and maybe the rest of the money can be deployed over a period of time. But yes, longer term, the structural positive trajectory of the company looks quite good. So over the next 18 to 24 months, the investor can make a decent risk reward.